Good morning. Nice to see so many friendly faces out there yesterday. And if you're like me, this is your first business trip in about 15 months. So as 2 nights ago, as I was sitting on the tarmac with an hour and a half weather delay for Dallas weather, with a screaming baby on one side of me and the guy who's 2 times too big for a seat on the other side, I was in a full plane thinking to myself, jet fuel, baby, we're back. So I'm very excited to see all of you and a lot of friendly folks who it's been too long. And I appreciate Joe and the whole Oilfield team for inviting us out this morning. It's great to see everybody. So today we were asked to talk about the crystal ball for the oilfield water market. And really, the main theme I want to communicate to you is there is no oilfield water market. There's only oilfield water markets. And I'm going to talk a little bit about how we look at those markets and how we try to be helpful for people making actual business decisions in those markets. So first thing that I'll posit to you is the water business is a lot harder than the oil business. And some people might get a little cranky about that and disagree, but let me explain why. If you spend $10 million drilling and completing an oil well, and you strike oil and you start producing crude, it's a pretty darn good bet that at some price, somebody is going to buy that crude from you. Right now, maybe you put the well in a really stupid place in the middle of Utah, and there's no pipelines anywhere near, and it's going to cost you a lot of money to get that oil to market. But somebody is going to buy that commodity from you. Now, you can spend the same $10 million to drill and complete a saltwater disposal, and if you put that disposal off the middle of Utah where there's no water passing by you or anywhere near you and none coming, you are completely screwed, right? That $10 million is gone. So I would say that if we're drawing an analogy, the oil business is more like a commodity business like, say, growing coffee. Like you could say, hey, the price of coffee beans is up, let's grow more coffee. Just like the price of crude is up, let's drill for more oil. It doesn't really matter where you do it. But the water business is a lot more like deciding where you're going to put the next Starbucks, right? If you put that Starbucks in a place where there are no people driving by, and nobody works, and there's no housing, you will never sell a cup of coffee. And it's the same way with where you place a saltwater disposal. By the way, Kurt, I see back there, that's a picture of one of your disposals for sale. So thanks for letting me use that. If you're going to buy an SWD, call buy an SWD. He's right back there. He wants to talk to you. So what this means is that traditional market analysis of commodity prices and oilfield service activity is basically useless for understanding the water market. And in fact, it's worse than useless because it can lead to really bad decisions, right? You can hear that the market is down for oilfield services generally and crude oil generally, and make the assumption that because there's just millions and millions of barrels of available water today, you're going to have no problem getting water for your project in the middle of Ector County where there isn't a drop to drink. You made a big mistake, right? So talking about general market trends when you're trying to make business decisions about whether you can get disposal capacity or get water capacity, or whether you can sell water, sell disposal, is a big mistake. All water demand, and when I say water, I also mean disposal, is local and temporal, spatiotemporal, right? So what you're seeing on the screen here is, on the left side, is a map of all of the frac water pits in the Permian that were built in 2020 and 2021, which we identified in satellite imagery, and also the density of frac water pits per county. You can see there's quite a wide range there. On the right side, you're seeing a bunch of Starbucks in a downtown area, right? So how did they decide where to put those Starbucks, and how did they fit so many Starbucks into such a small area? The answer is that in retail, and all retail businesses like coffee, they use a concept called trade areas or market areas, right? And so we have to look at water markets in the same way. Water is not a commodity business, it's a retail business, whether you're selling water or selling disposal. So you have to look at trade areas in the same way that Starbucks looks at trade areas. So what's a trade area? A trade area is basically a geography and a time in which you can competitively sell your product. So when you're looking at a retail store like a coffee shop, what does that mean? That means where are the population centers, What are the traffic counts, both on foot and in car? What are the flows of that traffic? Are people driving past you on your side of the street in the morning versus in the evening when they want coffee? Is there a stoplight there that causes them to stop and go? Is there another coffee shop, or more likely 3 additional Starbucks shops, that they're going to pass before they get to the new one? In that case, you're not going to get that demand, right? They're going to stop at one of the 3 Starbucks they passed on the previous block. So we have to look at water in the same way. We have to look at what's the competitive logistics range for trucking and transfer lines in that vicinity, right? Let's call that 10 miles. So you've got this 10-mile blob, because you also have to take into account where are the roads, right? You also have to take into account any pipelines passing through the area, because you can extend your trade market area through any commercially available or generally available pipelines that pass through that local area, and you can extend it out to, let's say, 10 miles on either side of any of those midstream pipes that pass through your area. So you can get a much longer blob, because of course it costs a lot less to competitively move water in a pipe than it does in a truck, or for that matter, in a temporary transfer line. You also have to consider the current water flows that are passing through that area. And then most importantly, you have to predict the future water use or water production growth in that trade area. Where are new wells coming, how much water is going to come from them. And you also have to subtract from that area the impediments to your growth there. So what are those? Rights of way that you can't get through, that blocks off your trade area. Dedications that are already in place with competitors, because you're never going to get the water from those dedications. You have to look at where the competitor facilities are located that are going to siphon off that water before it gets to you or gets from you to the frac site. And you also have to consider the subsurface and surface capacities, because there's only so much water that can go into the ground or formation in any given place, and there's only so much that can come out. So those are limitations in the 3rd dimension, not just in those 2 dimensions. So now let's look at the overall market, and I'm going to explain why I'm looking at the overall market. So what we've done here is taken a bunch of Permian water market indicators, normalized to a level of 100 at the beginning of 2020, and followed those up through the partial current month. And a bunch of these are indicators that you can't see anywhere else. So I know you can't read the things on the bottom, so I'm going to tell you what these colors are. So first of all, the gray line that has the big spike at the beginning and the big spike at the end, that is well pads detected in satellite imagery before permits were filed. So we uniquely identify well pads using satellite imagery and AI in advance of permit filings, and these predict new drilling not only 1/3 of the time before a permit's filed, but actually with much higher predictivity than using drilling permits alone, because a lot of permits are never drilled. So what you see there is the industry was getting ready to drill at the beginning of 2020, and then it fell down. And now we can also see that they're getting ready to drill again, which is great. You also see the green line, which has something of a spike at the beginning, then crashes and starts coming back in a big way right at the end. That's frac water ponds that we detect in satellite imagery. Frac water ponds predict new completions about 84% of the time in a local area. So we uniquely identify these ponds to predict where completions are going to happen. What you also see on here is the rig count. A lot of companies look at rigs. We track rigs daily like some others do. And you're also seeing the frac crew count, which we also track daily, which I'll show you in a minute. And you also see the yellow line is the normalized P18 disposal volumes, which are basically a proxy for commercial water disposal, which is approximately 60% of all water disposal in the Permian historically. And of course, what you see is what we'd all expect to see, right? Things started revving up in the first quarter of 2020, and then bang, they crashed. And frac crews crashed a lot harder than rigs did. And then frac crews came back quite a bit more than rigs did, and rigs gradually came back. And right now we're about 60% of the level of where we were 16 months ago. Here's the thing. You can't really make any business decisions on that basis. And what I'm going to show you now is more relevant for if you're actually making a business decision. So what am I showing up here? On the bottom bar, what you're seeing is the weekly completion count every week up until a couple of weeks ago, right? We identify that using some things I'm going to tell you about in a minute. What you're seeing with all the dots appearing and disappearing is that is the completion trend within every 5 kilometer square area across the entire Permian Basin. What the different dots mean is when you see a big green dot appearing, that means that the local completion trend is up, even though the overall market is down. right? So that's a case where the local area is doing much better than the general market. When you see a little green dot, that means that both the market and the local area there are both up at the same time. When you see a big red dot, that means that even though the market is rising, that local area is crashing. And so that's a bad place to be. And even though you say, oh, the market's up, let's get in. Well, you got in the wrong place. You got in wrong. When you see a little red dot, that's because they're both down at the same time, right? Everything's bad. The key point about what you're seeing here is that the overall market tells you very little about where is actually a good place and a good time to make any kind of water infrastructure investment. All water is local. And what you're seeing here is a further illustration of that. These are new frac ponds as they are built from the beginning of 2020 until the present day, a few days ago. And what we have found in looking at the numbers for the crash in 2020 is that the appearance of a new frac pond predicts a new completion within a month with an 84% correlation. Also, what you find is that completions predict or correlate to, I shouldn't say predict, correlate to commercial water disposal volumes, P18 volumes, at close to 80%. These are very strong correlations. However, production volumes of crude in general only correlate to commercial disposal, actually slightly negatively. There's no correlation at all. So what does this mean? It's all about the fracs, right? The tide went out in the first half of 2020, and a lot of people who thought, hey, the water business, water only ever goes up, right? The water cut keeps on rising. Even if the crude business goes badly, there's still going to be water. It turns out that's not true at all. The water business is completely and totally dependent on completions. It's all about the completions. Everything is, are there fracs happening, and where are the fracs happening, with whom? That determines everything about, obviously, water consumption demand, right? So there's no frac, there's no frac water. But also everything about commercial disposal demand. So the key element here becomes, how do we get ahead of, at the local level, where the completions are going to happen? That becomes everything in the retail water business for water supply and demand. And what we've done is look at what are the most important factors. Well, clearly there's two things that have to happen before a completion can occur. One is you have to have a pond, and two, you have to have a duct. You have to have a drilled but uncompleted well. So how do we find the ducts? Because that is where the water demand and the flowback disposal demand is going to happen in the near future. Both of these things are requirements. Well, there's a problem with both of these indicators. Neither one of them appears in a timely way in any regulatory data. There's no way to see this on commonly used energy intelligence platforms. So ponds, there's no permits for those in Texas. There's no way to pinpoint them. We see them in satellite imagery every few days. That's how we see where the pond is. How do we know where the duct is? Well, you can track the rigs and assume that a rig is there drilling a well. That's a pretty good assumption. The problem is, how do you know whether that duct is still there or whether it's been completed yet? Well, here's the thing. Completions are reported on about a 6-month lag by Frac Focus and by the Railroad Commission. Similar lag in New Mexico. So you can think that there's a duct there because there was a rig there, but you have no idea if the duct is still there. So you can't make a good decision about the duct inventory in a local area in a timely way to be able to take advantage of a market opportunity. You've got to wait 6 months for it to come out. And by then, it's gone, right? Someone else has taken advantage of it, who had better insight about what was going on there. So how do we see those? The answer is, we've built a new system called FracScape, which analyzes satellite imagery and mobile phone data every day from millions of people nationwide, hundreds of thousands of people in the Permian Basin, in order to identify the individual worker and truck movements to and from every well pad in the Permian Basin every single day. And so we're able to pinpoint rig crews and frac crews as they come and go from every well pad in order to see exactly where the DUCs are, to know exactly where the water demand is. So what you're looking at on here, to be clear, is in the upper right, what I'm doing is I'm running a video on repeat that's showing from the beginning of 2020 until a few weeks ago. On the bottom, what you're seeing is the red lines are rig activity daily. The blue lines are frac crew activity daily. The gold-colored lines are the DUC inventory. That's the spread between the rig and the frac. And as you can see, the DUC inventory soars from the beginning of 2020, as we'd expect, and then it kind of stabilizes at a certain point. It's actually increasing a little bit right now as drilling activity's been picking up ahead of fracs. What you're seeing in the upper right is the visualization of where each drilling event, each fracking event is happening on each day at that moment. And you're also seeing the status of those wells. So the yellow ones are where the DUCs are, the green ones are the ones that were already completed. And in the upper left, what you're seeing is one particular well pad that we just picked kind of randomly to show off what's happening on the well pad. So if you see those little dots, the red ones are the rig crew workers individually on that pad on that day. The blue dots are frac crew workers individually on that pad on that day. We actually see the individual water trucks arriving where they came from. We see the sand trucks arriving before the frac starts and which sand mine they came from. We can see the crude trucks picking up the crude when production starts and where they're going to bring it to the industry. And so we're able to use this to get a full understanding of exactly where the water business opportunity is locally. So if you want to start each day with a big steaming barrel of salt water, and who doesn't, the way you have to do it is understand, first of all, that the water business is a lot harder than the oil business because it is completely spatially and temporally determined, right? Oil price goes up, you drill for oil, but the water price goes up. That doesn't tell you that you should produce more water where. All water markets are local trade areas like retail businesses, like coffee shops. And those local water markets, supply and demand and the market opportunity is totally independent of the general market for water or for crude oil. The only way to predict those opportunities and be in the right place at the right time is to know exactly where the water ponds are being built and to know exactly where the drilled but uncompleted wells are at that time. And you can't wait the 6 months for the Railroad Commission to report it because by then it's gone. And so what we've done is create a system that's able to track that on a pinpoint basis daily so that water market business decision makers can make good decisions about where to place their water infrastructure like a retail operation would, rather than the way that an energy investor would, just deciding whether to place a bet on crude or on gas or on some generalized commodity. Thank you very much.